Trading on the floor of the Nigerian Stock Exchange saw the all-share index down 0.35% to close at 36,098.06 points. This was as a result of losses in Dangote Cement, Nigerian Breweries, UACN, Champion Breweries and IHS, while Nestle, Unilever, Okomu Oil, Just Breweries and Portland Paints led market gains. Well, the all-share index closes the week on a bullish sentiment, down 0.34%. Market heavyweight Dangote Cement once again responsible for this downward swing as the major loser of the day. Well, to talk more about this, I have Sam Ine, a stockbroker at TFS Securities and Investments. Well, thank you so much for joining us, Sam. Well, let's start by getting your view on how the index has moved this week. I mean, we are seeing it closing down 0.35% to close at 36,098.06 for the week. Tell us more about this.
The all-share index has been on the downward trend in the last couple of weeks, particularly when the Central Bank of Nigeria started implementing the increase in CRR, from 12 to 50% effective 7th of August. And if we look at it on the chart, like I said in previous interview, we see a double top formation. And if we are to go by the measuring index, that suggests that the all-share index may bet at about 35,819. Another reason we could look at why this downward trend has continued is for two reasons. One, investors seems to be adopting a kind of wait-and-see attitude to investing. We know that in the international market that Fed is scheduled to have its meeting next week, that's Tuesday and Wednesday, and by Wednesday they will be communicating their decision concerning the ongoing stimulus package to the global economy watchers. And there is a wide speculation that Fed is going to be scaling down this bond stimulus program from 85 billion to 75 billion. Now, if this happens, we expect that there's going to be a risk off. So investors are basically on the sideline to see what Fed decision will be come Wednesday next week. And on the local plane, on the local plane, we also know that our inflation figures is scheduled to be released next week. We know that this has been on a downward trend from May when it was 9% to July when it was 8.7%, and we're expecting that this might further go down. Now, if this expectation comes to be the reality, then we might have no problem concerning our MPR and what CBN might do. But if the reverse happens to be the case, if the inflation rate for any reason should jump up, then we're expecting that CBN, in trying to shore up the value of the Naira, in trying to reduce the inflation rate, might take some other measures concerning the MPR. Okay. So investors basically are just, on the sideline, waiting to see what's going to happen so they know what decision to take.
All right, we're moving away from inflation right now. I'm going back to the markets. Let's get down to specifics. Now, we're seeing the banking and consumer goods sectors dominating market activity again, while heavyweights Dangote Cement, amongst the laggards. Now, what are your thoughts on this?
Basically, it's just the general risk-off situation that investors have adopted, that the prices of the Nigerian breweries, Dangote, have declined does not necessarily mean we have problems in those stocks or in the economy as it were. The economy it's okay. The economy is sound. It's just that people want to ensure they take informed decisions so that they don't get caught napping in case any policy changes, is introduced by the regulators. So I think that's just basically it. And then another reason you also need to look at is that the season we are traditionally is not the best time to hold stocks. We expect that, say, from November, stocks prices begin to pick up as people rebalance their portfolio ahead of the earnings season come 2014. So those are just some of the factors we need to look at. And then basically the market has its own inbuilt mechanism. When the price goes too high, if it becomes overbought, then you expect that the bears will come in, take over, and they begin to sell. And once that supply pressure does not meet a good support base, it might just continue until a good support base is met, and then the bulls take over. So the market has its own way of, adjusting itself, and then particularly in line with the market cycle that we all know about. So this upswing, the downswings will just continue to be in place. I think that's what is really happening at the moment.
Thank you, Sam. But let's take a look at banking stocks. I mean, it's still performing pretty good. Now, would you say the tension around the 50% increase in CRR on public sector, funds has waned?
Yes, like we said in previous interview, we expect that over time this will wane, and then the banking stocks that the prices have not become undervalued will begin to pick up. And one banking stock that's really taking the hit of this CRR policy is First Bank. First Bank presently is priced way below its intrinsic value, and it's a good value that has been created for investors to come in and mop up these shares, as it were.
All right. Well, looking at the global impact of our market now, with the U.S. Federal Reserve tapering its monetary stimulus, now can you talk us through the ripple effect that will have, with regards to our market, if any?
Okay. Basically, let's go back a little. We all know the effect of stimulus is to stimulate the economy, putting more money into the economy to stimulate growth. And some of these funds actually have entered into other markets like Brazil, like India, like Nigeria. And then if Fed is going to reduce that, then the foreign investors will actually need to shore up their positions overseas. So that will cause them to supply and then move profit out. Now, when that begins to happen, you begin to see a big supply, what you might want to call the step of a big elephant moving down the price. So that is actually what is happening, and that is what might happen if the stimulus program is reduced further. What we hear is that it might be scaled down from 85 billion to about 75 billion. And why is Fed thinking of reducing it? Because they had actually anticipated that with this program, which they embarked upon about 2 years ago, that the unemployment rate will fall to, say, 6.5% come 2016. And the economy has so improved, and they have actually reviewed their projections a bit closer. If we look at the unemployment rate that was released first Friday this month, it showed that the unemployment rate actually falling from 7.4%, what it was in July, to 7.3% in August. So the American economy is actually improving. So you do not expect that the stimulus program will continue at this current rate. You need to scale down, otherwise they'll begin to fight the problem of inflation.
Well, Sam, I thank you very much. I've gotten your reaction, and I thank you for making that point very clear. Well, I've been speaking with Sam Ine. He's a stockbroker at TFS Securities and Investments.